All right, Steve here. It's March 8th, 2026. Today, we're going to dive into what I think is one of the most elegant strategies in all of options trading, the butterfly spread. Now look, this isn't a beginner's trade. This is a tool for a real tactician.
I love this saying because it just hits the nail on the head. You know, a vertical spread, that's kind of like a shotgun. You're aiming in a general direction, right? But the butterfly? No. The butterfly is a sniper rifle. You're not just betting a stock will go up or down. You are picking a very specific price, I like to call it a parking spot, and you're aiming for a perfect landing right on that spot at expiration. It's all about precision.
Okay, so here's our flight plan for today. We're going to start with the whole idea of this sniper trade. Then we'll dissect the anatomy of the spread itself. After that, we'll cover both call and put butterflies, and we'll wrap it all up with a pro's execution checklist. Let's get to it.
So let's talk about the sniper's precision trade. This whole thing is about being able to pinpoint a price target. What makes it so attractive, especially for seasoned traders, is that it's a really low-cost way to get in, and your risk is completely defined from the get-go. I mean, you know the absolute most you can lose before you even click that trade button. That's huge.
All right, next up, the anatomy of the butterfly. We're going to get into understanding this one-to-one structure. This is really the heart of the trade, the blueprint, if you will. It's a simple, symmetrical setup, and it's the key to making this whole thing work. Okay, so how do we build this thing? It's a three-leg strategy, but it actually involves 4 contracts. Here's the recipe. First, you buy one option. That's your lower wing. Then, and this is the crucial part, you sell 2 options right in the middle. That's the body. And to finish it off, you buy one more option at a higher strike. That's your higher wing. See? Buy one, sell 2, buy one. That's the 1-to-1 structure. Pretty simple, right?
Now, every single time you put on a butterfly, you're going to pay a little something to get into the trade. We call that a net debit. You're paying a small premium up front, and here's the beauty of it, the built-in safety net. That small amount you paid, that's it. That is the absolute most you can ever lose on the trade. No surprises, no margin calls. Your risk is locked in from the second you enter.
So what's the whole point? Where do you make the big money? It all comes down to the sweet spot. The goal, the home run, is for the stock price to land exactly on that middle strike price at expiration, right on the body where you sold those 2 options. If you get what we call a pin, if that stock price just sits right on that strike, boom, that's your maximum profit. You've just guided that stock right into the heart of your trade.
Okay, so let's get into the specifics. First up, we have targeting with butterfly calls. As the name suggests, this is what you use when you're aiming for a price target that's above where the stock is trading right now. So if you think the stock is going up to a specific level, this is your tool. And if you're on the Schwab platform, this is really straightforward. A butterfly call is built using, well, only call options. You'll just see 3 different strike prices, and the platform packages the whole thing up for you. That buy one, sell 2, buy 1 structure, all in a single neat little order. Couldn't be easier.
And this right here, this is why traders get so excited about this strategy. Just look at that risk to reward profile. Your max loss, remember, is just that tiny debit you paid to get in. Let's say it cost you 50 cents a share. Peanuts. But your potential reward, if you nail that pen, it could be, say, $4.50. I mean, think about that. That's a potential 9-to-1 payout on your risk. It is an incredibly efficient way to use your trading capital.
Now, on the flip side, we have the butterfly put. This is for when you're aiming for a price target below where the stock is right now. The mechanics are exactly the same, it's just the direction of your target that's different.
So let's just put it side by side to make it crystal clear. A butterfly call, you're using all call options and you're targeting a price above the stock. A butterfly put, you guessed it, all put options, and you're targeting a price below the stock. That's it. Same strategy, different tools for different directions.
Okay, here's another really cool thing about the butterfly, its relationship with time. You know how for most option buyers, time decay, or theta, is the enemy? Well, with a butterfly, time decay is your best friend. Because you sold 2 options in the middle, you're actually collecting premium. So as long as the stock hangs out near your center strike, every single day that ticks by, that trade can actually become more profitable. Time is literally on your side here.
All right, enough theory. Let's get down to brass tacks. The pro's execution checklist. These are the key details you got to get right. This is what separates a sharp, well-structured trade from a sloppy amateur one.
So listen up, because this is important. First, liquidity is everything. It's non-negotiable. When you're on that Schwab chain, you need to be looking for strikes with high open interest. That means lots of people are trading them, and you can get in and out at a fair price.
Second, you absolutely have to balance the trade. Make sure your wings are equidistant from the center. And here's a little pro tip. Often, out-of-the-money options, that's options with strikes the stock hasn't reached yet, have better liquidity and tighter spreads. They're often your best bet for building these.
And just to make sure that equidistant concept is perfectly clear, let's use an example. If your center strike, your target, is $100, then your wings need to be balanced around it. So you might buy the 95 strike on the low end and the 105 strike on the high end. See that? $5 away on each side. That symmetry is absolutely critical for this trade to work the way it's supposed to.
So, when you boil it all down, what is the butterfly? It's a trade of patience and precision. This is not for the impatient gunslinger who wants action every second. No. You have to have the patience to let that time decay do its thing, and you need the precision to pick your spot. And if you're wrong, if the stock flies past your target, you just take your small, predefined loss and you move on to the next one.
Look, when you do this right, it is one of the most satisfying and, frankly, rewarding trades you can put on. It really is a thing of beauty. Master the wings, and you'll master the pin. So, the only question left is, do you have the precision for it? This is Steve. Target your strikes, and I'll see you at the open.